How are you guys? Merry Christmas. It's a Christmas time, and we're going to talk today about the most important things in trading and different day trading strategies, which is basically, unfortunately or fortunately, not that many. And in the beginning, I wanted to tell you that most important thing, and what the people are losing in the trading, it's they think you need that much, the information to trade. Unfortunately or fortunately, you need this much information. When I started trading 25 years ago, I thought that the more information I'm going to get, the easier it's going to be for me to trade. And unfortunately or fortunately, I figure out years later that if I would use less information, that would be much easier for me. So the most important things in trading, all of it. So understanding of the charts, stop losses, risk management, money management, understanding to read your trades. For you to understand, very important thing. I spend a bunch of time, probably 70% of all time in trading. Besides, if you take away the trading day, 70% of my free time I basically spend analyzing the trades itself. So I would take the trade. The most important thing for me not to lose the information, it's when you did the trade, right the same day, you have to put all the information about that particular trade, because I guarantee you, almost guarantee you, next day you're going to forget about it. Because when you're in trade, you understand everything about why did you do it. But 90% of the traders, next day, they look at the trades and say, oh, I would never do that trade. So very important, every single detail must be analyzed in trading before you do any trade. I suggest to everybody, you have to understand that once you understand 70% of your directional moves are correct, so if you're right and the 70%, then you can definitely trade the directional moves. So obviously there's a few things you have to understand. You cannot trade and then learn. You have to do, first of all, in theory, and theory will bring you to the practice. The practice comes from theory. Theory does not come from practice. So you think if you're going to start trading, you're definitely going to become a good trader because you practice it. No, you have to understand the theory. Same as in any sports, tennis, basketball, or any other sports. So first of all, your coach explains how you should take the racket, how you basically point the racket, or let's say you play a basketball, how you put your hand, how you do it. I used to be a professional sportsman. I wrestle. So first it comes with the theory, and then you practice. So once you're going to have a 70% correct directional moves, you can only then start trading in real life. I'm very much against demo accounts. I'm a big against demo accounts. I don't like demo. I don't believe in demo. Why? Because your emotions, you keep it like this and you don't feel it. You have to feel every single trade. You have to feel it when you do it right, when you do it wrong, what's going to be if you do it wrong, right? What's going to be when you do it wrong. So the most important thing is to understand. So now we're going to talk about the trading strategy, day trading strategy. Honestly, it's not that many. First of all, obviously everybody knows it's the simple breakout. You'll be surprised. Most of the people say that the breakouts, they don't work anymore. That's total bullshit. 3 times a year I do seminars, and I do live seminars and live trading with my students, and I only trade breakouts because they're one of the simple. So right now we're going to talk about what exactly do you need in order to trade breakouts. First of all, you need energy. And energy is basically coming from 3 different ways. First of all, it's accumulation. So when you have a stock is accumulated. Second of all, it's a counter trend, when you basically the stock went up and then you expect the stock to go down. And third of all, it's a news. That's something you cannot control. But a lot of stocks which basically go up, they go down, and you can make a lot of money. So basically, as I said, you need energy, you need a very strong level, and you need a low volatility. you need very low volatility, because if you have a large volatility, very big volatility at the level, it's definitely so much risk, and you shouldn't be taking that particular trade. So as we figure out, you need energy, you need level, you need low volatility. Why? Because low volatility is a stop, and you need a place where you're going to put a stop. So right now we're going to talk about, you can use the stop loss in the different ways. First of all, the best way, it's the 1/10 or 10% from a daily ATR. So you take the volatility as a stop. Second, regular 5-minute bar. I mean the ATR of the bar. So it's the high minus low. And the third thing, this is the technical ATR. Technical ATR, it's when you have, let's say, false breakout, and you can put a stop loss here or stop loss here. So you have 3 different ways you can choose stop losses, and this is the easiest way to do. Now, another thing you can trade, it's that's what I like to do. It's not, simple strategy, but I like to trade pump and dump. So I'll tell you what's the pump and dump when stock goes up a lot, or it doesn't matter if you trade crypto or you trade stocks, and then basically you expect it to go down. First of all, you have to understand psychology of the people who trade. So if they buy at one point, they need to sell to take a profit. If the stock is going to go down fast, they're going to sell fast. If the stock is going to go slow, they're not going to sell. So you have to understand where the energy is coming from, where they're going to sell. If there is a very strong level ahead of it, let's say in this case it's a resistance level, obviously everyone who bought the stock here going to try to sell it here. So you have to understand psychology, how the people trade. And right now I want to show you the stock, basically, which I had it in the long side and I had it in the short side. So that's the stock called Marathon Digital Holdings. You see, first of all, there was a huge accumulation on the stock. I recommend the stock to buy at $10 a share, and a lot of my students, they bought it. So for you to understand, I know you might believe me, you might not believe me, but I have a Telegram channel where basically I post all the information. It's a Gorget Pro, you see. So you can see today, by the way, I recommend short of the Bitcoin right here. This is Forex, this is crypto. So basically I do everything public, and nobody can tell me that, I don't know my shit, I know my shit. So what do we have? We see the stock went from $10 to $28 a share. So it's almost 300%. Obviously the people are going to take the profit, but you have to understand one thing. In order to trade pump or dump, in this case, you have to understand the entrance point where you're going to enter. Obviously, you have to find the points or levels where the people are going to dump the stock. So, if it's daily chart is not enough, you go to the monthly chart. So you see, that's a very important thing. You see, it was the huge level ahead, and we touch exactly that level. You see, right before the stock, the instrument went up, right here, you see. So it was the high 28.12, the high was 27.73, so almost. You see, so everybody before, as I told you before the stroke level, everybody start to dump the stock, because stock can never go up forever. As you say in the United States, nothing is going up in the old-fashioned way. So in this particular case, obviously you see there's a mirror level. So if the stock is going to go below what we have here, 25.10, stock is going to go below 25.10, that is going to be clear false breakout, and everybody who bought it before, they're going to start selling. So you have to understand. Then second thing, you have to go on a 5-minute chart. What are you going to see in a 5-minute chart? You have to see the low volatility. You cannot sell in a volatility like this, because the faster the stock moves, the bigger your stops is going to be. So you see, if here you enter the position, the stock went down very fast, it came back very fast as well. So you have to have a slowdown of the volatility. The volatility is supposed to be very slow, like here, here, and only then you can enter the trade. So what do? First, you analyze the level. So level we have is 25.10. Second of all, you analyze the direction. Third of all, you analyze the energy. There's a plenty of energy to push the stock down. And third of all, you have to have a low volatility. So once you have a low volatility, you can get it. And then you go stock by stock. You see, the stock has a level, very strong level of $5 a share. Obviously, it doesn't have much place to go. So here, let's say if it's going to go to $6 a share, you can make a lot of money. It's a 20% profit. But you see, it's a slow volatility, very slow volatility. It's a very strong level. Then you go on a 5-minute chart. You see the way stock trades. You see it's very good. It's not a crazy moves. It's a very slow, small stop. So that's what you do. I go stock by stock. You go stock by stock before and until you figure out one company which is going to show you a nice chart for you to understand. So you have to understand every single move you're going to do. The AMC, you see AMC Entertainment. Stock is dying. That's what it is. So you go every time lucid. You see, a lot of stocks are dying. Sooner or later, some of those stocks, they're gonna go. There's another strategy. I'll tell you right now. You can trade. It's the biggest short interest. I'll show you right now. So you go on Google and you go stocks with biggest short interest. There's a bunch of websites. You see a bunch of websites, so you can figure out how many stocks with a high short interest. You can go on Yahoo, or you can go. There's a special website. You can go on MarketWatch. You see high short interest stocks. You see that's the flow. Beyond Meat, 44%. It's a lot. Anything above 25%, it's a lot because stock needs a lot of energy to pull back. So Upstart Holding, Dyne Therapeutics. You see, there's a lot of stocks. So which has a basically very big short interest. You see, Novavax, 40% short interest. It's a lot. It's a lot. The stock basically is getting killed. So you see float, you see outstanding, you see where the industry and who's killing the stock. You have to be very careful, especially with the therapeutic stocks. I mean, anything which has to do with the biochemistry, because this is particularly a completely different strategy. You have to understand, for example, here, big lots, right? As the float only 27 million shares, it's not enough. You have to go anything above 50 million, 100 million. Groupon, very small number of shares outstanding. That's not what you need. You need a large number of shares outstanding. So if the buyer is going to come, the stock is going to turn around. So obviously, guys, there is a bunch of different strategy to make money, but they're all identified by identifying the stock. As an entrance point, this is the easiest part. So I wish you good luck. Happy New Year to you all, and the best.